The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome to the Diagnostic Trading Hour. And we got some things. Obviously, the market's moving a bit up and down and, big down after yesterday. And let me go ahead and give you the current market. And we'll just talk about sort of where it's at right now. We got the S&P down 7 points from yesterday. And that's after that big fall yesterday already. And we got the Russell down 6.8 with the NASDAQ down 8. We got the Dow down 90 points. We got oil, looks like it's up 9 cents. We got natural gas up 3. And we have corn down 4. And soybeans down 11. So sort of a different trend there for soybeans today. Gold also down a point, which is just interesting watching all the dynamics going on. We got the euro dollar down just 9 pips. Aussie dollar down 52. And we got the pound dollar down 3 pips. So, like I said, market has been moving quite a bit. Some great opportunities to hop in and go long. Yesterday, early morning, and then, of course, go short basically late afternoon, or I guess late morning, so about 10 o'clock yesterday, turn around going short, and then just following it ever since. And as we can see, the advanced decline ratio is showing that negative outlook right there, and a lot of people have been asking, what's making that happen? And the simplest answer I can give you is really the Fed announcements yesterday that came out. So I don't know if you're listening to any of those, but on the Fed announcements yesterday, the thing that happened was, who spoke? Well, Lockhart spoke. Lockhart is very against keeping interest rates, or very against QE, and against quite a bit. So, anyway, so he gave all this negative. He's like, hey, you know what? Unemployment, we don't need to be concerned about that. Inflation's in check. We've seen good retail numbers, et cetera, et cetera, et cetera. Well, all that means is, from his perspective, that the Fed doesn't need to do any kind of intervention. And so, once he got done speaking, and all that rolled out, that was really probably one of the biggest things is after everybody digested what he had to say, that they probably weren't going to do QE. So now what they're going to do here, we're going to find out in, basically 1 hour, all right, is what are they going to do now? So what are they, or not really what are they going to do now, but what are the other members saying? What do they say inside the meeting? So the meeting minutes will be coming out here, like I said, just in, less than 1 hour, 50 minutes from now. And basically what that is everybody's going to pour over every single word. I mean, you go and you start listening to all the commentary. They're going to read every word. I mean, at the end of the day, follow the market, all right? So who cares what they say? Who cares what the Fed said? Follow the market. And basically it's just a very detailed recording of, everything they said and their insight on the economy, financial conditions. And the reason, again, that is so important is because it comes down to what does everybody think that the Federal Reserve is going to do here on September 13th regarding QE. And so that expectation has sort of been deflated based on yesterday's comments by Lockhart. And, he's one of the FOMC members there. And so people are going to see, does everybody else think the same thing? And if they do, that's going to take this whole big bubble we've been getting about an expected QE and pop it. And if it looks like there might be something there, it may drive it up. Either way, no matter what you do, all right, you need to make sure that you are trading with defined risk. And if you haven't done it already, hop over on the website at tfnn.com and click on Nadex. And trade along with us, whatever you want to do there. You can get a free demo account. Just click Create Account. Scroll down there and go down to Want a Test Drive. Okay, or you can open a live account. The nice thing about a live account is you're going to see accurate live prices. It's not that the demo doesn't show you accurate prices. It actually reflects the live account. The problem is, since everybody has $25,000 in funny money, people place weird orders that can mess with your bid and your ask. And so you'll see some stuff over there that may not actually be in the live account. But, it's going to be very, very accurate except for just, some of those little anomalies. And you can open a live account. You can even open it right now and fund it in a little bit. But, just click on that. But to open a test account, literally takes 15 seconds. Okay? And it's always good, of course, to learn in a demo account. That's where you want to learn your mechanics. It's a very expensive thing to learn in a live account. That's just, it may, you may make money, but you could easily lose money just by hitting the wrong direction, not knowing how to use the platform. So it's all about the mechanics of the trade. So that's why I urge you to definitely open a demo account, even with opening a live account. And just to learn the platform, get familiar with it so you can go with confidence into how to use the platform when you move forward with your trading. And you just go to demo dash, put in your username, put in your first name, last name, phone number, and email address, click apply for demo. They'll send you a password in a matter of seconds, and you can literally log in. And if that password has an O in it, by the way, it says 0. Okay, it's not the letter O. And then you just come up here and you click log in. And then once you log into your demo account with Nadex, then you'll actually be able to see, the spreads, how everything's working, and you can actually start trading on it. So it's pretty cool. You can go in there, and literally you could be trading the next 15 seconds. So if you want to trade just for fun, the Fed funds rate, and but you're a little nervous to do that in any other market, then this gives you the opportunity to do that. And so let me go ahead. I'm going to pull this off. I'm going to log in to my demo account, and I'll show you what it looks like. But not Fed funds rate, but Fed funds minutes. Fed funds rate coming up here in a few weeks. And let's see. All right. Again, just hop over to tfnn.com, click on the Nadex banner right there, and you'll be able to see the link directly to Nadex, so that way you can sign up for a demo account. Once you log in, it's pretty simple. It's not necessarily, we're actually going to be launching a tool here. We're very, very close to having it done. And here on the Diagnostic TFNN site. And we're going to have a diagnostic site loading up, and then we're going to have all sorts of tools and fun gadgets for you. One of them will be to make it very easy to find spreads in a matter of seconds versus having to go through and do all the analysis. Another one is going to involve actually showing you the standard deviation levels. So we got the first big round of that done last night, and a lot of people have been antsy when to know how we do that, what do we do on that, and there's a lot of math involved, and so I want to make it as easy as possible for you on how to do it. I don't want you to have to do like 20 levels of math. And so that's why I haven't really just been, giving out the formula, because it hurts whenever you look at it. And so it's really important that you understand how it works, and to give you the formula that we use. You have to. I don't necessarily use what I call standard deviation, sort of re-termed what I use there, and I use basically implied deviation. So standard deviation is looking at historical movement, historical volatility. Implied deviation is basically using something like the VIX to determine your implied volatility, and we use a very similar formula to that. And if you just want to see, I'll do a screenshot for you and show you just the fun formula. But this is a formula to determine the implied volatility. So that's why it's not just a ABC. Here's the formula, and so we use this formula right here, and basically it lets us back out to the standard deviation once we have. Or the implied volatility. Once we have that implied volatility calculation, then we go in and we basically do a little bit of math where it involves basically the close of yesterday, and then it also involves multiplying it times that number, and then it involves multiplying it times the square root of days till expiration. So basically time right there. So anyways, it's a long, complicated formula, and we're working on getting all the math done. Like I said, we got round 1 done already, and so I'm pretty excited about that. So that way we can get that, and hopefully we'll have that up very, very soon for you. And this just shows you the basic model here of what will be on it. But this is, sort of rough draft version 1, but showing the standard deviation levels for the S&P and the Russell and the NASDAQ and the Dow, and once we get these up, we're focusing, of course, on the Nadex products right away, and then we're going to make it where you can actually put in any symbols you want, like have like 10 optional fields. So that way, let's say you want to put in something for, let's say Apple, then you can type Apple in and it'll do the calculations for you as well. And so again, very excited. Should have that out very soon, and I'll be, of course, announcing that as soon as we got it for you. And but yeah, over here on the Nadex platform. Like I said, there's only really 2 types of products, okay, on Nadex. It's very simple. There's bull spreads, and there's binaries. So, and both have their benefits, their strengths, their weaknesses, etc. And with bull spreads, it's a lot more like trading the underlying market. So if you go in and you think the market's going to go up, you buy it. If you think the market's going to go down, you sell it, and you can make money. And you want to buy or sell one that's as close to the floor or the ceiling as possible. So, right now with the S&P like right at 1405. Then this would be a spread you could do for one that expires at 2. That expires right at the Fed funds announcement, so I probably wouldn't want to do a trade betting on the market going down. that's going to expire literally, like we're looking for a flat market right now. For the next hour, we're not looking for a whole lot of activity. What I'd be more interested in is possibly like the 3 o'clock, okay? And you could even stretch that out. That's going to be a 1405 also, which is great. And then you go down to 8 to 415. That's going to put you higher, 410. So right there, 1410. Well, why is that good or bad? Well, the issue with that is that's 5 points higher, so it's more risk. So just to show you an example, I'm going to put that 1410 up. And then, let's see here what we got. And then I'll show you the 1405. So on that right there, then what you can see is, let's see, up there, at 1410, we have quite a bit more risk, okay, because we have basically a whole nother 5 points of risk built into the trade, and so that's going to cost us, additional money to do that trade. Now, the one advantage to the 1410 is it can make more money. Look, it can make $240, where this one can only make $75. So that, again, that is the one big advantage to the wider spread with more cost. And where does that risk come from? What's that number? Okay. So, well, the number basically is pretty simple. I'll show you how it works. All you do is if you're selling, then what you're going to do is you're going to take the sell price, okay, and you're going to take the ceiling, the top, because you can't lose any money above 1410. So at 1410 minus the sell price of 1403.9, you get 6.1. So very easy, and that's where basically they're getting their calculations from. And so again, you can go in, you can take advantage of that. If I click that, it'll update it to 61 there. And so $61 in risk on that trade. And on the S&P 500, it actually would take 5 spreads to equal 1. So you do times 5, and you get 30.5. So ticks. And then every tick is worth $1, so just divide it by 0.1. It's a $305 risk. That'd be like shorting the S&P 500 futures. But instead of putting up $500 in margin and having an uncapped risk, you'd have a very capped risk at $305. So now on the other side over here, if we check this out, look at the 3 o'clock one. Again, the one that's after the announcement. And you can go in and go, okay, well, what's my risk on this trade? So on this trade, my risk is $25. If I did 5 of them, my risk would only be $125. That's only a couple points of risk, so that's sort of nice. And so that could be a trade that you would consider. And so you could do that. And you could even straddle. And so let's say you want to straddle this trade right here, and we're looking at, again, the 3 o'clock expiration. So bull spreads, if you're on the platform right now, US 500, 3 o'clock. And so on 3 o'clock, we click buy right here, hop on over, and add that one in, $25 risk to buy. So we could have a $50 risk with a $75 profit potential. It's not bad. It's a 1-to-1, and basically just expecting the market to be down at $13.95 or up at $14.15, which really is not an unrealistic expectation with the announcement that's about to come out. But that will have to happen within 1 hour of that announcement coming out, okay? So anyways, go ahead and check that out, and I'll be right back after the commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit tfnn.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome back here to the Diagnostic Trading Hour here with Darrell Martin. And if you ever have any questions, feel free to call in whenever you want to. And you can call in on our line in the U.S. here at 877-927-6648 with any questions that you have about Nadex, the market in general. Just whatever questions you got. Just call in 877-927-6648, and I will be happy to take your call and help answer your questions. And then if you're outside the U.S., you can call us at 727-445-1044. And looking over at a few other things right now, just looking at the market, and still pretty just flat and hanging out right now, and that's really what we expect leading up to a Fed funds rate. And looks like we had a little pop right there in the stocks. You can see on the advanced decline, a bunch of shares getting bought up real quick. So, not necessarily something to, signal an uptrend if you back it out and see there. But nevertheless, it is moving up a little bit, but we should expect just a little bit of, ideally confined volatility for about the next half hour. And, maybe it runs up before it goes down, maybe it goes down before it goes up, but we shouldn't see this massive moves. And it doesn't mean it won't happen, but it's not normal for it to happen. So, anyways, looking at that right there, and then you can go over, and so if, let's say like we're looking at the Russell, you can hop over, we can close out these, and we can hop over and check out the Russell 2000. And so we can look at these spreads and go, where are they priced at? 809. And sometimes during this little bit of volatility, you could really help yourself position a good possible trade. So like right here on the 806.8, you may decide you want to get into it now, versus wait until after expiration. And so that trade right there, you'd be risking $22. If you did 10 of them, it would equal one Russell futures contract, which is $220. Seems like a lot, but in reality, that's only a 2-point move in the basically 2.2. So $2 2-tick move in the Russell, and so really just not a massive move. And you just want to keep that in mind as you're trading these, that they really are helping you limit your risk, and you can't lose money again above the ceiling. So if your ceiling on this trade is 809, then that $22, that's that $220, that's capped. And the cool thing is, not only is your risk capped, but you're not out of your trade. So it becomes a stop loss, but not a stop trade. So you still get to trade that all the way through the end of the trading day. Now, before you pick that trade, you definitely want to be looking around and seeing what the best spreads are to trade on Nadex. Like I said, we'll be bringing some stuff over to you. Here's a little sneak peek for you, and where you'll be able to hop in and choose different markets. So if we wanted to look at the Russell, and let's see here. And we said, okay, I would just want the Russell to drop the US 500. And let's just say we want to sell, and we want at least 2 to 1. So every dollar at risk, we want to make at least a potential $2. And if we have a risk, we'll just say $100 on the trade. Now it's going to give me all of my trading options. And then that allows me from this point to be able to go in and basically analyze the different trades. Like, how long do they have till expiration? And I can look at, how far do they have to move to break even, and what is my total risk on the trade. So like in this trade right here, $21 expiring at 2. This one's $21 expiring at 3. So why in the world would I want to do that trade, So I might as well just go ahead and pick this one right here, get another hour, exact same risk. And that's really the advantage of the scanner, why we want to get this out to you, is because it'll help you eliminate a lot of the trades that, aren't the best choices for you. And if you see that like popping up and down, I'm just going to change it over to like 1.8 and let's make it like 85. That way, so if it's like right on the line, it didn't appear and disappear over and over again. But and it even shows you your risk-reward ratio. So right there, we got it too. Now this one is $31 for 10 more bucks. I can trade till the end of the day and have 165 profit potential, and and I only have to move 2 points. All I'm really, or 2 points, 2 points, 10 more dollars. And I get another hour and 15 minutes. $10 more that's really time premium that you're looking at right there. Okay, that $10 is time premium, and it's not complete. There's a little bit of true value in there as well that you can take advantage of. So, but anyways, this will be a great tool. You'll be able to access it very soon, and it's sort of nice. You can actually go in and you can click right here, or just hover right there to show you how many contracts to equalize it, or if you want to hedge it. So like right here, if we did 10 of these, that'd be $310. Whereas if I go, what if I wanted to hedge? So I could put on the buy side, so buy the spread, sell the underlying. And this one is only $170. This one's $185. This one's $280. And but it profits really quick. So that actually might be my pick for my trade for going short on the Russell 2000. Okay. And what I do is I sell the Russell 2000 and I buy 10 spreads. And there'll be a very simple thing over here where you can go in and you can actually pick demo or live. And but we'll come back and we'll place a couple trades and let you see how everything works. Talk to you soon. Stay right there. Be right back after the commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour here with Darrell Martin. And we're going over quite a few different things here, and just wanted to make sure you understood that there's a lot of different things you take advantage of, not just the spreads, but also the binaries. And so what you're going to be looking at is potential trades that you can do on the binaries. Let's say you want to trade the dollar, because it's a Fed fund announcement, right? So, basically it's an announcement based on people's opinion of the Fed funds rate. And so with that, you can go in and, again, if you're going to trade a news announcement, you need a spread that expires after the news. Pretty simple, right? Because if it expires right before the news announcement, like at 2 o'clock, that isn't going to do you, really any good. So you could, again, trade the spreads or the binaries on the indices. Or you could go over and you could trade markets like the actual, the dollar, like Aussie dollar, Euro dollar, pound dollar. And, of course, Euro dollar being so volatile right now, that might be the one that you want to trade. And you could do something like, a straddle. And because you really don't know what's going to happen. So 3 o'clock would be one option for you. All right. But also, if you want to get a little bit tighter, because this is really going to push it far out there, say at 25.16, let's go down to dailies. All right. They're also going to expire at 3 o'clock on the Forex binary pairs. And so looking at those, then what you could do is you could open up a couple spreads. And let's say like one of your, or binaries, And so you could open up, let's say this binary right here. That's going to give you a nice risk-reward ratio. And you're looking at about, a little less than $20 with an $80 profit potential. That's if the dollar, goes up in value and the euro goes down. All right. But what if the dollar goes, what if it's reverse? Okay. What if the euro goes up in value, the dollar goes down? You could look over here at, say, like this market, and you could put that trade on. So that would be another option for you. So 1850 there, and you go in, and basically risking the exact same amount, and can make $81 if it expires above that at 3 o'clock. Now, here's sort of I guess you could say the trick. And let me pull euro dollar up for you, and I'll show you, I guess what I said you could call it a trick, because the Fed funds rate goes a little bit nuts, right? So, if you're looking at this news announcement right here, and you're going, okay, where is it right now? 24.73. Well, I mean, going up or down, like to these levels, really isn't doesn't seem insane. I mean, at 24.73 out there on Forex, and I'll even double check that. I personally like to have two different quotes, and you got 24.71. So it's depending upon who you're looking at for your quote there, and whether they're quoting bid or ask or mark. And with Forex, it can always be a little bit different on the spreads, but. So basically 24, 71, 72, 73, and it doesn't have to move up that far on the upside at all in order to place this trade. So understand that if it goes above 2,500, now if it gets to 2,500, here's the trick. What is it going to be worth? All right. Well, let's look at where the market's at right now. The market's at about 24.73. So it's going to be right in between here. All right. If it's at the market, let me see if I can find one that just shows you an at the market spread. Okay, there we go, 24.75, or binary, and they'll always look like this. When it's right at the money, it's going to be worth about $50. Okay, so one of the trades that you could do is you could go in on this ticket, and you could literally put an order in for both of them. Okay, so let's go ahead and I'll do that as an example for you. All right, and on this one we'll buy over here, and then we put a place order. So I'll do 10 contracts on this side, I'll do 10 contracts on this side. Now, what does that make our total risk? All right, our total risk is 185 plus 175, $360. Okay, so that helps us understand what our total risk is. And if this thing was worth 50, if I could sell it, so we'll go back down to 1 just to show you what I mean here. If I could buy it for $18.50, and let's just say I could sell it for $45. All right, then so 45 minus $18.50 would more than cover my risk on this side over here, being $17.50. All right, so since it would more than cover my cost, then I could actually put an order in on both sides, and then if it hits either one of the sides, I have an order to sell that side. Because a lot of times when a Fed announcement comes out, market flies up in one direction, then flies back down, or flies down and flies back up. So that'll cover my risk, and then if it goes back in the other direction, I can make money on that side also. So, this is one example. So we're going to do this trade. We'll put this on. So I'm going to sell 10, and I'm going to buy 10. So I'm selling 10 of the 1.2400 on the daily. So if you got a Forex binaries, euro dollar, daily, and then I'm selling the euro dollar will be basically less than or equal to 1.2440. By selling it, I'm saying this statement is false, where it says it'll be greater than. And so I go in and again, let's make sure we have the most. Always want to make sure you have the current market price. I mean, unless you're wanting to wait for a certain price for it to get up to, down to, so that way you get your fill. And so by putting it at 82, I hit that. That'll go. Okay, and then I'm buying this one. So putting that one in. All right. So now those are both in, and I can see they've both been filled. So now what I can do is I can go over here, and I can put by clicking on this green button in my open positions, it'll open. This is my short contracts, okay? It'll open a contract in the opposite direction. All right? So now I can say, you know what? I would like to buy this back at 45. Hit place order. It's done. And now I can say, I would like to buy this one back, or sell this one, because I bought it, so I'd like to sell it at 45. Hit place order, and it's done. So now if it goes up or goes down, if it gets to either one of those levels, it's going to more than cover the cost of my trade, okay? So very, very helpful, and it allows me to get in the trade, straddle the trade, take profit on the trades, because I will actually profit even if only one side makes money. But if it goes back the other direction, then I'm making $100 on basically about a $40 risk. So sort of a very cool way to trade it, and allows you to cover your cost and make some money. So again, a very, very simple, very easy thing. And what you'll see over here in your working orders, if you click on the working orders tab, and highlight that up, then you'll see that I have the order working. And these binaries can get really volatile, okay? I mean, like really, really volatile. So, which is great, because even in flat markets, they can move. But when you got a news announcement, they can just start flying all over the place. So, since that's the case, since they can start flying all over the place, then you want to be ready for that, and you want to know, okay, what can I do? And that's why I have that take profit in order now, because what if it flies up there, and I could have been profitable, but now I lost? And that's probably one of the number one mistakes people make on Nadex is they don't have a take profit plan. All right, and you need to have a take profit plan in place anytime that you're trading Nadex. So just make sure you do have those take profit orders in there, and that way if it flies up, flies down, you're ready to take advantage of it. And now you're done. You just let it play itself out. And now you could go in and you could say, you know what, I want to, maybe only do 8 of them or whatever. And just to calculate it out, what would you need to make? Okay, you need to make $18 dollars. Basically, if our risk is, let's see, what is our risk? Our risk on either side is $18 even. Okay, so I need to make $18. I need to make $180. All right, so if I'm going to make $180 or $18 on one, then I go, okay, I need to make $18 to cover the other side. All right, and here's a way to sort of increase your profit level, potentially increase your profit level. $18 on one. So if I need to make $18 on one of them, and I have that, then what do I need to be able to sell? How many do I need to be able to sell it out at in order to get out? And so you may only decide to sell, like, say, 8 of them, okay? Because your profit potential, 45 minus 18, is $27. That's actually $9 more than you need, all right? So basically, what would it take if I have 10 contracts, okay? What price would I need to sell at in order to make $18 but not sell all 10? So if I only had 8 contracts, so 180 divided by, and we'll say I need to make, we'll divide it by 8, I need to make $22, okay? That'd make the 180 back. Or if I say, the 180 I need to make divided by 7, I need to make $25. So I could change my order to take profit on just 7 of them. That would cover my cost, all right? And if you want to make sure you cover your exchange fees too and all that stuff, you could do 8. But what I'm going to do is I'm going to adjust it to 7. That covers my risk on either side. And so I'm going to go in now, and I can click the green order in my working orders, and I can edit it. I'm going to say on 7 of these, all right, take profit at 45. Hit amend order. I'm going to close it, and it'll amend the order right there to 7. And then now I'm going to adjust the other one. So on both sides, I'm doing that. So now my advantage to this format of the trade is that I am able to cover my risk in either direction on the straddle. Even if they expire, like if they fly up and then come back down, I don't lose money, okay? But if they really fly up, then 3 of them could actually make quite a bit of money. How much could 3 of them make? Well, let's look at it and see. So if 3 of them, all right, could make, if I'm risking 18, I can make 82 times 82. So if they actually, let's say it actually does expire either above, all right, 2,500 or equal to or below 2,440, then I'll basically make $246, a little more than $246, right there. So once you add in the other, trades and everything, so $246 on that trade. And what if I did it the other way? Okay, so what if I did 45 minus 18? And you always want to, analyze your different trades. That's what I try to do, figure out, what's the best setup. I'm making $27 times, 10. Well, that's $270. So is that a better trade or not a better trade? And so you may go, well, that's really not a better trade. So, you may decide that it's just not worth it to you to try to get that additional money. But, again, that'd be, let's see here. If I have 3, then I make a total profit of 84 on. All right. And so let's see, 3 times, or what is it, 88. 82. There we go. $82. $18 risk. $82. So $246 risk on that right there, or profit potential. So again, $18 risk, and every single binary. If you don't understand binaries, I'll break them down for you real quick. They're all worth $100, no matter what. All right. So if I'm risking $18 on the trade, what I'll do is I'll put this right here. It's just pretty cool to start playing around with the different profit, ability scenarios and everything else. If so $100 right there, I'm risking 18. Well, what's that difference? 100 minus 18, $82 is my profit potential on the trade. And so I can go in and go, all right, well, If $82 is my profit potential, and I can make that on 3 of them by doing 7, I'd only make $246 profit, and that's because on the other ones, right, what's going on in the other ones? The other ones, I'm just trying to cover the risk on the other 7. Now, I understand the other 7 wouldn't lose anything if we closed them out this way, but we got to have it in place so that way we do take some profit in case. So we got the 246, the 100. So now, what would the other ones make? Well, the other ones would make 45 minus 18. Whoops, got that on there. This one here. So 45 minus 18. All right, because if we sell them at 45, like if we bought at 18 and sold at 45, or if we sold at 45 and bought back at 18 type thing, or sold at 82 and bought back at 45. So if we, anyways, if we basically made $45 minus 18, all right, then we'd be able to go in and make a $27 profit on the trade. And on how many of them? On 10. So if I can make that money on 10 contracts times 27, I'm making $270. So just by looking at this trade right here, and I'm going, okay, well, wait a minute. So which one's, better? And it seems the one with the higher number is better. And what was the, we want to look at the price. Well, what's the price we looked at selling these at? We looked at selling just 7 of them at 45 and not all of them at 45. So let's go ahead and look at, well, what happens on the other 7, right? Because this is on 3 of them I make 246, okay? So if on 3 of them I make 246, and I go 45 minus $18, make $27 on 7 of them, it's $189. And my risk on either side is 180. So that basically gives me an additional $9 profit, okay? Because I eliminate my risk on one side because it's profitable, and on the other side it's still sitting there. So $9 additional profit, $255. So what I actually find out is instead of what we were looking at, the first scenario was actually the most profitable scenario, and that's selling all of them out at $27. So profit. So now we can go back. I know I'm taking you through some moves here, but I want you to look at I want to get your creativity going. I want you to see that there are different ways to trade these. And you may think it's best to leave it on, but in this case, we found it's actually better to take it off at $45. So I'm going to go ahead and hit amend order. We're going to close it out at $45, and there we go. And then we're going to go down here. We're going to go to the other one, and we're going to change this to 10 contracts because we found that doing 10 contracts at 45 was actually cheaper than doing 7 at 45 and letting the other ones make $80. It actually came out to less profit. So on this one, then we just click amend order. So we're in our trades. Done. Easy. Check. Okay. If it gets to either one of those levels, of the $45 level, then we will be profitable. And you can look over here on the daily contracts and sort of see, what's a $45 level looking like, and that's pretty much going to be at the money. I usually look at the weeklies a lot of times. If you can't find it on the daily, look at the weekly. And you can see at $24.75, which is basically right where the market is right now, you're able to sell at $45. And look at the liquidity, at 200 contracts right there. So that's really the simplicity of the trade. That's how it works. And hopefully that will be a good one for you. And we'll go back over here. We'll check out daily. And you can look at the different trades on Eurodollar. And all right, well, we'll wrap this trade up right after this news announcement here. And but we'll come back right after the commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
So, all right, so welcome back. We got the Fed funds rate coming out here in 6 minutes. And, people always ask, why am I down money? I just got in. What's going on? And, well, the thing is, the reason you're down right away is because you have what's called bid-ask spread. And that happens on stocks. It happens on futures. It happens on options. It happens on NICs. It happens on everything, okay? So it's your bid-ask spread, the difference where you can buy and sell. And a lot of times people get confused on, well, which one do I buy at the bid or I buy at the, offer? Or, how do I do that? And here's a really simple rule for you. Whichever one you want, you can't have, okay? So you want to buy lower, right? And you want to sell higher. Well, you can't, all right? So that's just sort of the unfair part of the markets, right? Well, that's where the market makers, the other traders, whatever, making some money there. And so whenever you're looking, like if we're looking at, say, these binaries right here, and let me zoom back out. And so if we're looking at them, then whichever one you want, all right, you'd want to buy at 12 and sell at 15. You can't have it. So the one you want and you can't have, that means I have to do the 15. Well, if I want to sell higher and buy lower. Well, since I can't sell higher, then I'm selling lower. So that lets you know how to sort of click on the bid and offer. Eventually you just memorize bid and offer, bid and ask, or have the position set up. But if you ever get lost, ever get confused, don't know what is what, then you can go in and you can place that trade. So it allows you to know, am I buying or am I selling? What am I doing? And so there's just a lot of different things you can do. You also can play some trades, like if you just want to have like a sort of a money maker trade, okay? You can go in on something like this, and you can literally risk $50, you make $9.50 if the euro dollar shoots up to 25.20 by 3 o'clock. And so pretty simple trade. And then right down here, if it goes down to 24.20 by 3 o'clock there, risking 45, you make $9.55. Okay? So that's sort of a big moneymaker trade. And why is it a big moneymaker? Because you barely risk anything and you can make a lot on the trade. And so those are sort of some fun trades to do. You just got to understand that, I mean, you're just sort of gambling in that sense. So be careful with that. Just because, like I said, it may be a really, really nice profit potential, but at the end of the day, you could easily give that profit up. And if you're expecting to make, we're expecting to make a couple $100 on this trade, hopefully, if there's a big move. So if there is, then that'll allow us to get in there and profit on that and make some really, really good money. And but so like let's say they don't make money, that $100 we made $246, or $270. Actually, we're looking to make about $270 on this trade. So if we make $270, let's say we give up, $100 of that, $170, but for the potential to make an additional $950 if it takes off in either direction. So that's something you can do right there. I'm actually placing all these orders also over on my live account, so to see if I can, grab some nice profits there. So just make sure you have fun, but Nadex manages your risk, all right? But you need to manage how much you put at risk. So it's very important. The other thing is Nadex manages your risk, but you need to manage your profits. And that's why we put in the working orders. That's why we put in the take profit position. So that way it would manage our profits for us. And you can even do that. Let's say, if you went in and you did the 10 contracts over here on our open positions, where we went in, we got the really, really cheap ones. Go in on the same thing on those and do 5. All right, just do 5 of them. Okay, put that for $45. That makes you $275. The other 5, hey man, they may make a fortune, but I mean, it can make $275. So, or if you just want to eliminate your risk, even one of them, let's see, 2 of them here would cover your risk really on both sides. So maybe put 2 in on both sides just in case it gets there. So no matter what, even if it falls back, you're not giving up too much of that big profit, but you have covered all your risk. So 2 at 45 on that side, and on this side right here, we're going to sell 2 at 45. And that puts our orders in, and good luck in the markets. I will see you tomorrow at tfnn.com, 1 to 2 o'clock, Diagnostic Trading Hour here with Darrell Martin. Y'all have a great day.
Time is the great equalizer of all.